Welcome back to Newscentre. It's been nearly 4 months since the United States imposed 50% tariffs on India. Uncertainty over a bilateral trade deal remains, with negotiations underway in full swing. India's exports to US remained largely resilient in November, rising 22% year-on-year. Near-term demand has held up, but exporters and trade bodies warn that rising costs are increasingly being absorbed by both Indian suppliers and global buyers, and this may not be sustainable over the medium term. Concerns about the road ahead are already visible. Diamond workers in Surat are feeling the brunt of tariffs, with estimates suggesting more than 1.5 lakh jobs lost since the levies were imposed. Many are also working at sharply reduced incomes. To cushion the impact, the Indian government is pushing for diversification of exports, stepping up trade negotiations with other countries. The challenge now will be to sustain the export momentum. Joining us right now is Ajay Sahai, Director General of Federation of Indian Export Organizations, and Arpita Mukherjee, Professor at the Indian Council for Research on International Economic Relations. Thank you very much for joining us on the program today. Professor Mukherjee, if I had to ask you about the impact on Indian exports January 2026 onwards. So far, we may be resilient because before the 50% tariffs came into effect, there was some amount of front loading as well. Many of the exporters had planned well in advance and they got their shipments in. Having said that, what kind of a brunt do you foresee in case we don't have a trade deal in a January to March period?
See, we are in a difficult situation now because we are facing one of the highest tariffs with the largest market that we have. Having said that, part of this tariff is cushioned on both sides, as you rightly pointed out, because there are certain products where other competing countries also have a high tariff. What we really need to do is to reduce the logistic and other cost of transportation. So that's one point. Second point is that, some of our competitors are really facing low tariff, and that's cause for concern. We are also trying to diversify exports by signing trade deals. We did it with Oman, we did it with UAE. And if we are able to get the European Union deal through by January, things may be much better than what we stand today. So two things we need to note in January. One is the US court cases, which itself may rule in favor or not in favor of the tariff imposed. Secondly, there is a likelihood that India and EU may announce a trade deal. And a European Union trade deal, this particular product category, can be really beneficial for India to kind of diversify export. Having said that, exporters may need some incentives.
All right. Let me get in a word from the DG of FIEO, Mr. Ajay Sahai. Mr. Sahai, you've had so many consultations with the Ministry of Commerce, with the Commerce Secretary as well. Has there been any kind of assurance on a timeline, on some sort of timeline that they're looking at within which a trade deal would be signed with the United States? Are you expecting some good news, maybe in the last week of December, first week of January?
I think it's nothing which is left to the negotiator. Probably a political call has to be taken by the US president, and therefore it can happen any day. It may be slightly delayed also. But from the exporter perspective, I think we have to see that deal is in place before the next season starts. So at best, exporter will be able to continue with this kind of export number probably up to March, because in the new season, if the tariff remains in place, buyers will move to the next supplier. As of now, a lot of companies are not moving through because you have a social audit also by the major companies. And companies are also hoping that since this is a temporary phenomenon, let us somehow maintain our good relation with the buyer, and once the DTA is in place, whatever little loss the industry is having, they will be able to recover it.
Right. Mrs. Sahai, as our colleague Santya Gora was reporting from the Surat diamond industry, where more than 1.5 lakh jobs have been lost since the tariffs were imposed. I'm sure there are other labor-intensive sectors which are also facing the brunt. Could you give us a sense that on ground, what's been the impact so far on jobs? And when you speak about the next season, by which quarter or which month of 2026 do you expect things to start getting impacted negatively in the absence of a trade deal?
In fact, in some of the segment, for example, we thought that marine will be the worst hit sector, but luckily for us, marine has diversified into the new market of China, Russia, and Europe, and their export numbers are pretty impressive. In the diamond segment also, of late, some concession has flown, and if we look into the number for the gems and jewelry export, they are pretty good. Please bear in mind that a lot of exports to many of the countries in South America and North America was happening through the US. US was importing, and from there the distributor was sending the consignment to the rest of the world. Now we are directly exporting that, and therefore the number to these countries have moved up. But of course, I do agree in some of the labor-intensive sectors, there will be challenge. Some of the industry has moved to the domestic market also. I don't have the exact number, what is the impact on the ground on some of the micro and small sector, but government is doing its best. The Reserve Bank of India has also extended some kind of support to the export. We are hoping the deal to be through very quickly. And as I told, I expect the deal to be there by January, February, because when we talk to the exporters, they say that they are somehow managing with the existing order. The order for the new season, which will be commencing from April onwards, have been put on hold. And if the duty issue is not settled, probably these orders may go to some other countries.
Right. Let me also get in Professor Mukherjee once again. Professor Mukherjee, when we speak about the initial deal that we're looking at for the United States, it's going to be a goods deal primarily. We have, according to various reports, there is no official confirmation from the government, but it seems that both sides are veering towards an average tariff rate of 15 to 20%. At that rate, how competitive will we be to other geographies in South Asia? And that is not the only aspect. After that, you'll have deliberations on more non-tariff barriers. You'll have deliberations on services trade as well. You would like to have a broader trade pact in place and some sort of legal footing as well. So there will continue to be hiccups, even if we get this early trade win with the US in the range of 15 to 20%. What do you think we will need to do in the year 2026 to protect ourselves against this US-led volatility in trade talks?
See, one of the things you need to understand is that the 15 to 20% gives us quite good competitive edge in the US market. So basically, whoever they are giving that 15% tariff lines, whether it is Japan or any other country. Now, the problem is not that. To get that 15%, we have to give 0% in many areas of imports, which are very sensitive for us. Let's say if we have to open up the dairy market, that's really sensitive. We haven't done that for even New Zealand. So therefore, you need to think that how open are the Indian domestic industry to agree to open up sensitive sectors. So that is the first hurdle that the trade negotiation is facing. The second hurdle that the trade negotiation is facing is that suddenly the US has changed its position. US with Indonesia has a position where they said, okay, sign on digital trade, sign on, defense with Japan. Now, here we don't know how surrogate is the deal with Japan, defense and other things, but digital trade is something which India would like to sign with US. Visa is something that India would like to do with US, and that can be a part of the initial package. That was the initial feeling in India. Only tariff deal has a big problem that we also have a large domestic market where there is a lot of sensitivity to zero tariff. I think that getting at 15%, if you get 15%, it's a good deal. Like you are getting the deal as anybody else has received it. So the deal is not bad, but the bigger issue is that what are you going to give for that deal? And I think that's the problem at this negotiating stage. US at this stage
All right.
is negotiating non-tariff barriers with any of its trade partner. That's the second point.
All right. Yes, and those negotiations will possibly begin the second or third phase of the trade talks next year. Let me also get in Mr. Ajay Sahai once again. Mr. Sahai, when it comes to improving the competitiveness of exports beyond this trade negotiation with the US, we are at an advanced stage of negotiations with the European Union, and possibly by 26th of January, when Ursula von der Leyen, the EU Commission President, arrives in India, we'll possibly see a signing of the EU-India deal as well. Having said that, what more do we need to do in order to ensure that our export growth story continues on a sustained path as well? Because it seems that irrespective of the outcome of the trade talks with the US, you cannot count on the Trump administration. They may throw up some other tariff tomorrow.
No, you're absolutely right. And if you look into India, we have gone for a very aggressive FTA strategy. This year alone, we have formed up the 3 FTA, one with, of course, with UK, and then with Oman, and then with New Zealand. And I'm pretty sure the EU FTA should also be finalized by January. And once that happens, probably we are getting a market as big as the US, and for some of the labor-intensive sector, this may be an equally important market. But of course, I will not say that should come at the cost of the US. US is an extremely important market for us. Probably the profit margins are also better. I feel that when it comes to the technology and intellectual property right related sectors of exports, we will continue to do very well. The challenge is more on the labor intensive sectors of export. And besides tariff, I think we need to work on the skilling part of our worker. That is extremely important, both for improving the quality and consistency of the product. That needs to be looked into. Right. The logistics cost, in any case, is getting addressed, and to some extent, we have improved on the logistics, and probably in the times to come, we will see much action happening also. Luckily for us, the Red Sea route has now become operational, which has reduced the transit time also and the cost. So these factors are positive, but of course, the world is moving towards protectionism and weaponization of trade. We have to probably live with these kinds of challenges.
All right. And Professor Mukherjee, final question to you. Are you expecting certain measures to be announced in the union budget? Do you feel that there could be some measures which on a long-term basis could support our export story?
Yes, definitely. I hope that there are some long-term measures announced, and more in terms of the trade facilitation, which Mr. Sahai has already pointed out. Certain things are happening already in India, but probably we need cross-border trade facilitation agreements to happen, cross-border trade to become paperless. We have lesser documentation, lesser time frame will actually help our trade partners both on the from the import perspective and export perspective. So one is that trade facilitation measures and going paperless should be something that should be announced in the budget. Secondly is probably some kind of incentives, and a backup plan has already been there. The BharatNet and other information sharing platforms are happening. How do you diversify a market? There has to be a market diversification strategy and a risk mitigation strategy. So there may be some measures to that effect, and there may be some changes in the foreign trade policy, because the foreign trade policy is quite ongoing, and how does it support the MSMEs? Some measures to support the MSMEs would be, well taken. It will give them a lot of mental comfort to try out new markets. That's the bigger issue.
All right.
They can't try it out.
All right. Thank you very much, Professor Mukherjee, and Mr. Ajay Sahai for joining us for a very important discussion. So there is a hope that there will be a trade deal between India and US in the month of January, but there is no confirmation from either the Indian side or the US side. But yes, exporters are hoping we will see some clarity on the trade deal soon, at least before the next season hits, because as Mr. Ajay Sahai said, that if we don't have a trade deal by the next season, there will be an impact on India's labor-intensive exports. That's all we have time for. Goodbye and thanks for watching.